TGIF, everyone. Hello,
Morning, Dale.
Richard, Brock. Brian, hi. How are you, buddy?
Not too bad, mate. You?
Pretty good. It's Friday. Hello,
thanks.
Hugo. Been a long week. Sometimes they feel longer than others. So getting a pullback in the gold market here after, a very good performance because the yen keeps chugging along, right?
Yeah, on and on it goes.
Yeah. Still a lot of momentum, even though the RSI reading is lower than the previous peak. I thought we might get a pullback to throw over. I don't know. I can't short it after a week like this. Here's your daily and your weekly.
There's a saying we have over here. I don't know if you have it in America. That this market is not giving you the steam off its piss.
Yeah, well, I'm sure you're also good way for euro pound bears to end the week.
Yeah, at last.
Huh?
At
right.
last.
Oh, back off.
All right, anyway, pretty nice negative week. Yeah, so nice trade, Ryan.
Yeah,
and S&P's had a pretty good week, didn't they? Is this going to be a failing rally? Or are we just going to blow to new highs? So anyway, tough to know. There is some resistance in NASDAQ up here at 15.2, and this could be a little ABC. S&Ps actually are above the daily 50 again that everyone was worried about. So I don't know, now that it's above the 50, it could probably fail next week. I don't know. We'll see what happens around the full moon next week, Blake. What do you think? Shine on. Shine on.
There's
harvest
a full moon.
Yeah, harvest moon.
I'm going to give you a full moon here in just about a minute.
All right. Well, anyway,
hey, it's a family show.
I have to go harvest my crop under the harvest moon.
So, I don't even know what to say about that. But Ryan, good morning. We were just actually having some pretty good conversations in the chat room, and one of the things I love about the Forex Analytics community is just being able to have some conversations. One of them, and I'm going to let you guys in on some of this since it's Friday, and we can talk out a few of these things. But first of all, I was just telling traders that in the chat room, like, I've had a rough week of trading. I've shaved off a few percentage points off of my trading account this week. And that's just one of those things where I've had a really great couple of months, and then I've given some back, and it happens kind of quickly and you don't expect it. But we were talking about how I was just saying how I'm gonna have to square up positions because some of these ranges are breaking. And then one of the newer members of the chat room that came in from Ryan's group was like, hey, that's trading, right? You make money in the ranges and then they break out, and then you have to cut your losses and realize that the range is broken. And because if you just keep fading, then it becomes gambling. I'm like, yeah, that's exactly it. You gotta recognize when, things are moving. And then that morphed into another conversation, which is really about like, the yen pairs. And this is like a, conversation that we were having on the webinars this week, saying that the yen pairs are now moving and they're moving higher, and they're moving aggressively higher. And so now with the move in the yen pairs, my opinion is this is the FX market preparing for, the carry trade, and really the carry trade being, as Japan keeps their rates unchanged, and I can't ever foresee them. I mean, maybe they will at some point raise rates, Ryan, but it doesn't look like it, right? Ever.
Yeah.
And we prepare for, I know we're a long ways away from actually raising rates. Some people say the end of 2022, whatever the case may be. But interest rate expectations are now shifting, and I think this move that we're seeing in these yen pairs is really, you know, the market preparing for, you know, a carry trade type of environment in the you know, years ahead. And Ryan, you know, came back, and Ryan, we can have this discussion here, which I think you're completely correct, by the way. He's like, oh, I'm just not on board with the higher rates yet. And I was like, well, I think this is one of those things where the FX market is moving well ahead of the market, and which currencies do. I mean, you know, the currency market, the nice thing about trading, or, you know, currencies in general, is this is where the biggest money in the world is at, right? In this market. So when you see like these tectonic shifts in the FX market, you have to go, okay, what is the market really, you know, preparing for now? But Ryan, what are your thoughts on what I just said here regarding the yen? And here, I'm going to go ahead and share the screen here. So
Yeah, you know, yeah, I'm on board with what you're saying about the carry trade. I think it's a bit early. And the reason I say that is we're just seeing the yen go. You know, if we're seeing a run to other high yielding currencies, then I'll be more on board. But this is a big yen flow, and I'm not 100% sure what's behind it. You know, and euro dollar, cable, Aussie dollar, we're all sitting in the same old ranges with those, which gives me again a bit of a pause for thought on what's actually going on. But so what it smells to me, this is a big flow coming out of Japanese yen, and I mentioned early today in the chat room. You know, one thing you've got to remember, if you get these big type of flows, and we spoke about them yesterday, how money moves around, you've got to be careful looking at your charts, because these guys, they don't give a monkeys about the 50 fib on a 3-day chart move. They don't give a monkeys about your 200 moving average. These guys are moving, they're shifting a lot of money, and they don't look at charts. So like you said, you know, 100% correctly, when you get these changes in ranges, when the market is doing something different to what it was, you've got to adjust with it. So,
yeah,
you know, for the yen pairs moving higher, don't rely on your tech so much. You know, if you were trading, you know, selling tops, trying to sell tops, and you having a 50 pip stop loss, that was working when we were ranging, you know, 109, 110.
right.
It's not working now. So
Right.
tighten things up, lower your risk, know which way the wind is blowing. If you're going to fight it, you don't want to be risking a lot of money on it. But this is when you get these big, massive flows.
Yeah, and I was I use the analogy, which is just I'm going to take us back in time a little bit here with the yen. And I remember we'll just take we'll take the dollar yen, and this is one of those things where the exact I don't want to say the exact same thing happened, but you know, back here in 2011, this is when Abe's 3-prong economic policy, 3 arrow. Was it 3 arrow?
Yeah, 3 arrows.
It was 3 arrows. 3 arrows. And that was the break right here at 104. And you know, we basically went from 104 to, you know, I mean, this move from 104 to 109 was wicked, right? Yeah. I mean, that was, you know, that move right there was just wicked. And oh no, I'm sorry. I'm looking at a daily chart. What am I thinking? I got to go back to like 2010 or 12.
Oh yeah, that was.
Here we go. I'm sorry. I was looking at the
wrong chart. Yeah.
Yeah, I was like, hey, wait, that doesn't look right. You know, right here. I'm sorry. Back here in 2012. I'm sorry. So this move right here from 81 to like 102. I mean, think about that. That's a 2,000 pip move right here, and it just ripped. I mean, and there was nothing you could, when you, and Ryan, when you say there's, you know, you gotta, your tech, anything that you thought, I remember, and I hate to call him out because, you know, we've done a lot of things with him, but I remember seeing Boris Schlossberg on CNBC at that point. And, you know, he's been on here before. I've interviewed him on Trader Summit. He's, you know, he's a guy that I've known for years. But I remember when he was on CNBC, and we were right here, like, you know, at 82 or 84, and he's like, it's, you know, it's overbought, it's going to roll over. And I'm just like sitting there going, man, I don't know if you should be, you know, saying that, because it just, I mean, it doesn't matter what you were looking at from a, you know, from a technical perspective, it just ran everybody over, and it continued to run everybody over. It was a big shift in policy for Japan. And
yeah, it's massive.
Yeah, it was massive. And, you know, so let's go to like today's day. We got, you know, the dollar yen really breaking out. And as you said, Ryan, there's a lot of something really big is happening, and a lot of money flow is happening right now with the yen. And this is not a time to be a hero, because we could be in a situation where you start to see inflation, you know, runaway, you know, kind of inflation globally. And, you know, you start to see everybody prepare for, you know, immediately, you know, not just taper, but higher rates. I don't know what it is, you know, and, you know, you had Sansi says reflation more likely than stagflation now. I mean, I don't know. But you have to respect it, right?
Yeah.
That's the most important thing, is you got to respect the moves, because we are breaking ranges all over the place. And, you know, yeah, I think it's a little overbought today, and you can probably, you know, as a day trade, you might be able to scalp some of the stuff. I was like, I was looking at the Kiwi yen. You know, I don't know if I necessarily want to short it here, but it did complete an AB equals CD move, or really close to. So, you know, and we have some data coming out right now, or in the next 20 minutes. We have like what retail sales,
Empire Manufacturing, the first manufacturing for October. So that's a good one to watch.
So
you're 100% right. You know, I there's not many people in the room this week who have had a good week. I mean, I've lost on every scalp I've traded this week.
Yeah.
But I do, when I scalp, I know my risk, and I know which way I'm going. And I'm, you know, this is all tight stuff. You know, I lost 16 pips on Aussie dollar, shorting at 14, stopped at 30. You know, I don't care if I lose 16 pips. You know, what I don't want to do is, you know, be shorting dollar yen at 113.80 yesterday and still in the trade at 114.32. That's the sort of crap you've got to cut out. I mean, I say to traders, you know, if you're trying to fight a trend, if you lose 5 trades on the trot, that's when you pull off and you sit on your hands and you say, it's not working, I've got to stop this. And then you let the market come to you, let it develop, see what's going to happen. I'm looking for dollar yen, before I consider shorts now, I'm looking for some proper confirmed highs. So let's say we've got the highs up here at 35, 39. If we get a dip to 114, 113.80, great. If we're going to move back up, say Monday, Tuesday, I want to see it stop around 114, 20, 30. If it does that, and we've got, you know, 2 days between this high today and the high next week, then I can think, right, the market's showing me there's something up here now. But, you know, looking at the 15-minute charts, the short-term charts, hourlies, half hourlies, there's nothing there signaling that we're close to a top yet.
Yeah, you know, and that's really smart, just looking for like a confirmed top. And, you know, speaking of the dollar yen, I mean, I've got to point out, we are getting really close to the highs that we wouldn't have seen since 2017. I mean, these are the 2018 highs that were, or 2018, near the 2018 highs. Actually, those would be the 2018 highs. We'd be new 2017 highs if we break above this 1450 level. You know, I mean, this is
mad, isn't it?
It's crazy, right? I mean, you know, look, and just in the last 2 weeks, we've gone from 110, and, you know, take the low of last week around the 110.80, you know, to 114.30. I mean, that's a big move for the yen. So, you know, again, we have to respect it. Yeah, you know, I was talking to Mark
maybe
Chandler.
going to 2.618, man. What do you think?
Oh, I mean, well, there's a couple yen pairs that are already there. So, like, you take the, you know, you take not the sterling yen here. Let's go look at them. Aussie yen is, you know, on its way to that 261% extension. Kiwi yen's trying to reach up there. Canadian yen already hit the 261% extension of the last down move. I'm on a weekly chart. So that last down move, we've already hit that 261% extension. It's some crazy wild moves here. And so, yeah, it's nuts. I don't know if Stelios is here, if he's making it in.
Nope. Good
Oh,
morning.
you were being really quiet and just kind of little sneaky around.
I am here. I actually had well, let's wait for the week to finish, but it's been pretty good for me because I'm quite overweight in gold, silver miners, and they've done very well this week. So I'm happy.
Wait. They've done really well, but then again, here you go. You look at, and this is one of the other things that's a little scary. You got gold that turned really aggressively.
Yes.
It's 200-day moving average.
200 DMA, exactly.
Yeah, 200 DMA that I was like, this is the big risk. Yeah. Well, this is, I blogged about this a couple of days ago. I said, hey, we have to get, a good daily close above the 200-day moving average. Silver, big rejection of this trend line. Nice. 618 as well. And man, so what do you think is going to happen with the miners?
I did tweet earlier today that gold bounced off the 200 DMA, and for bulls it's not over. It's not it's far from over in terms of we're breaking out, and I still think we could see a run towards the lows, 1680, or what was it? It's not out of the question, but we kind of expected. I mean, you blogged about it. We kind of expected the reaction there. It's very technical, and it's happening. Obviously, if gold, that's a pretty big reaction. I expected a reaction. I just didn't expect like that. But look at the last 2 days. Look at the last 2 days movement. I mean, it was very, very impulsive, and you're going to get a reaction for sure. And like you said, if we continue lower, then miners are going to get hit. Of course, that's part of the game. But
I was wondering if they're gonna respond to the stock market higher, or are they going to respond to?
They respond to both, and strangely enough, they tend to respond to the lately, at least last months, they tend to respond to the general stock market level more than they respond to gold price, which is a bit weird because really their business is affected more by the product and not what Apple is doing, right? So, but I mean, I'm watching them closely, and as I've said so many times here, I only have just under half the position I want. So I'm still very, I don't want to say skeptical. I'm very cautious because I do think we might have one last flush, and it's great to get long something, 15% lower than here.
Yeah. Hey, really quick, our friend Jack, who used to be in South Africa, and Jack has moved to wow, gosh, Jack, help me out. Jack, he's a long time in our chat rooms for years. I want to say, God, 5, 6, 7.
Netherlands, Jack, yes, there you go.
Netherlands. He moved to the Netherlands, almost 10 years in our chat rooms, and he's been kind of in and out the last year and a half since like the whole COVID thing, and making his move from South Africa to the Netherlands. Jack, good to see you. So Jack, I need to throw this out at you. Hold on really quick. Give me 1 second. This is for you, buddy. Yeah, I'm Batman is an old joke from years ago. I'd say I remember I was so tired. I was like drunk. One of those, terms.
Drunk and tired.
But no, just I was on a webinar and I was so tired that I felt like I was drunk anyway. And I was like, good morning. I feel like Batman this morning or something like that. And we all laughed about it. And it was like just a huge funny thing.
See, Jacques is proof that
that was it.
Hanging out with us is like being in Hotel California. You could check out, but you could never leave.
That's very true.
Yeah, but okay, well, hey, Stelios, thanks for the update on precious metals.
Another thing I wanted to say. Sorry, did I interrupt you?
Ahead,
you want to say something?
Please, yeah.
Another thing I want to say. We've been seeing equities in the last few weeks being a little bit. How should I say it? Nervous.
and
nervous.
then-
It's not, and people were saying, and I'm reading and talking with people who are saying, oh, this is it, the start of a new bear market and this and that. And I'm like, I'm not convinced. I think the S&P, there's an area around 42.30 to 42.50. If that is not broken, we are just still in a very, oh, you have it there as well. There you go. You have that line. We're still we're consolidating. We've rallied, and we're consolidating. And unfortunately, this is how I see it. And I wish we weren't. I wish we got some proper two-way action, but we're not. And you're seeing yields going lower, equities going higher. The dollar, we've been talking about the dollar. We've been saying for a while that maybe we get one last push, towards a 95.5, maybe 96 on the Dixie. But I think the dollar is going lower in the medium term. As for the short term, well, for me, nothing's changed. So I'm so boring, right? I'm boring. I know. My ex-wife thought I was boring.
I don't even know why your
still,
wife married you. You're so boring. My God.
Yeah, I know.
Yeah,
Exactly.
So let's talk a little bit about this. I want to talk about the markets where they're at right now, and this is I've seen a lot of people reference this chart. Do you guys know? And I'm just gonna say this out loud. This chart pattern will work. It's an inverted head and shoulder pattern. They work on occasion. One of the things that I really do not like about these patterns is when people use them in reference to a continuation pattern, meaning that you're in a really strong trend and then you have an inverted head and shoulder pattern as a continuation pattern to a new high. That is something that I refuse to do. And it'll work, but what it does is it creates really bad habits for technicians. And it's been very easy to work in a market that trends higher all the time, which we've undoubtedly seen for the last 12 years. So you just, 12 or 13 years, you just, post financial crisis, it didn't matter. Inverted head and shoulder pattern, everything's going higher. Right. So, but this is poor habit, because this is a reversal pattern overall, not one to take us in a new high. So I've seen a lot of people referencing, like I said, it can work and it might, but I'm not sold on it, but I see a lot of people referencing it. So I want to be respectful because there's a lot of people that see it. One thing I am being respectful of with the S&P is that we have broken that downtrend line. We're above the 618 retracement. We are now making higher highs on a 4-hour basis. We haven't taken out the 4480. And I was talking to Katie Stockton from Fairlead Strategies. Dale, she's so nice, by the way. Yeah, thanks for introducing us. She's a great technician. Yeah, really, really nice lady. Had a chance to sit down and chat with her yesterday. And I'll just tell you this, but you got to watch the rest of her stuff because she has a lot to say about Bitcoin and not just the S&P. We talked about S&P crude, and anyway, she's like, I'm really not sold on this rally. For her reasons, she can go over her indicators. You'll see them a little bit later.
Peter Bookfire referred her to me, so she came from a good source.
Oh yeah, and we were talking about Todd Harrison and the cannabis industry, and had really off camera. Her and I had a really good conversation. She's a sharp lady, but anyway, needless to say, I just want to say that I think we have to be a little careful at these levels, and there's a lot of people that are bullish, expecting a move. And I have to also say that our team, Grega just took his long off. He has a long DAX. I think Andre just took his long S&P pattern and play on, which those guys did really well, catching these moves off of the bottom here. I think we just have to be careful. I don't know if we're in a new bullish environment, but looks like we are consolidating here. So you guys have any thoughts? I saw Steve's in here, and I think because you guys had end of day rain.
Hey guys, I'm here.
Oh gosh, and we got Grega Horvat here too, which is great.
Yeah,
I guess Friday, if you like people like him. How you doing, Grega? And Steve's here too, which is great. So look, we don't, Dale, correct me if I'm wrong, we don't have a guest today, do we?
No, that's
minus.
why Grega was going to be an interview. I mean, he could come on and do his thing, and we could all ask him questions.
That's awesome. Okay, so
Yeah.
so Grega, we're gonna. I can't wait to see your views of the market. And by the way, great job on your patterns in play here. I know you caught that DAX long. I know you were trading a couple things, and so really well done. And we're going to be excited. I'm excited to see your views because, as I was just saying, a lot of people are very bullish the stock market right now. I'd like to see how you feel about overall where the general markets are at. But I want to point this out too. Let's go over to the euro. The euro. I've been saying for the last couple of weeks, and this is probably the currency I should probably be trading more right now, but it's just not moving as much. So I've been trying to prey on some of the more volatile stuff as of late. But while we're below 116.50, we have to stay bearish, and you can see the like the bias chart. We're just bearish below 115.60, right? And the thing is, we can't even make higher highs on a 4-hour basis. Trend lines coming in view. I still think that there's the risk now that we've worked off all these oversold conditions intraday. And by the way, you think about this on you look at relative strength. Relative strength is, not oversold anymore. We've worked all that off. We are now free to, move around a little bit more. I still think this AB equals CD can complete, below the 115. Obviously 115, we got mega support, 161% extension, 127% extension right here of this big move. So we have a lot of support down here, but I don't think the euro is really, telling us right now it's ready to do a full-on reversal. So you guys have any thoughts about the euro at this point? It's trading heavy, and as Dale pointed out really early this morning to Ryan, the euro sterling is breaking down too. So
it's dead. Bury it. Stick it
hey, stop it.
No, I'm talking about euro dollar.
Okay, all right. You're probably talking about euro sterling too, but anyway, but yeah, I mean, why would I want to own euros right now?
You're taking a vacation.
I'm asking for a friend.
Because you're taking a vacation to Europe, going to Greece to see the guys. You'd need euros.
Yeah, that's right. But I'm not doing it this year. Matter of fact, I think the next trip is Steve's coming to the United States, and we're taking Steve to Disneyland.
They're letting him in.
I'm coming too,
and we're taking Stelios to Disneyland.
Can you give us the head up so we can front run his FX?
So no, but I mean, look at the euros. It really continues to trade pretty heavy here. And it's breaking down against a lot of different currencies. I mean, you have the euro, not the euro yen, obviously I should not go there, but you have the euro sterling breakdown. You have the euro Aussie is broken. The euro New Zealand broke down this week. I mean, look at the euro just across the board looks pretty ugly, really. Even the euro Mexican peso went down, which it's that thing's been actually pretty well elevated, and I think it's at risk of actually breaking higher at some point soon. But anyway, that's neither here nor there. Hey guys, any final thoughts before we go into this retail sales data?
Oh.
Retail sales. Grega is so secondary right now, Dale. Don't you understand that? Just kidding, Grega. We can't wait to see your charts.
Can't say that about the wizard.
He is the wizard of waves. No, I'm excited to hear his viewpoints on the market. So, but we do have to get through retail sales first. So, any guys, any final thoughts? Grega, you have any final thoughts for retail sales before they hit?
Actually, I'm looking. You mentioned the euro dollar, right?
Yeah.
I posted in the chart room that 1.1570 to 1580. This is very interesting intraday support. And now if we imagine that this short-term structure could potentially be bullish while we are above 1522, then we can imagine that other currencies, which are already very strong, I think that could prove to be even stronger if we consider that weak currency is showing potential bullish setup.
Okay,
Like
so
Yeah.
you actually think that the euro could actually bounce here and turn bullish?
Yes, 1570, 1580 upward levels are
So
1650.
this has to hold 1570, 1580 for you to be bullish, basically.
Yeah, exactly.
Okay, okay.
So a little
All right.
ABC here, Grega, on the pullback, and then we go for 3 or C.
Yeah,
Okay.
exactly.
So we're
See what I've
gonna
learned from you?
yeah.
Okay, we got the data coming out.
all right, let's go pull up
Data.
our
I thought he was on Star Trek.
we're gonna pull
Commander
up data
data.
flash.
Lieutenant Commander data.
Oh shoot. Hey,
Data will
retail
be
sales
strong.
stronger than expected.
Yeah.
So
Retail data cannot be weak.
did I just hear Steve?
Empire
Yeah.
State.
Oh
Empire
my
State
God,
was
Steve's
weaker,
here.
quite a bit weaker. Empire State, but stronger retail sales. Yeah.
Okay.
Don't expect retail sales to get weaker
Why?
Why is that, Steve?
because retail sale numbers are not inflation adjusted.
All right, so
they could buy less and it shows up as more.
Exactly.
well, if they're
Oh.
not inflation adjusted, then retail sales are going to go bazonkers in the next few months. You know, and you know, one of the things that I want to let Grega take over. I don't want to go on too far here, but I just want to say, I was talking with a friend of mine that, you know, he's just, you know, continuing like, why is this stock market going up? He just keeps texting me, you know, why, blah, blah, blah. I'm like, you know, inflation, markets are going to go higher. And he's like, this is so stupid, you know, but I'm like, but prices go higher in inflationary environments, you know, and prices pretty much across the board. So, you know, anyway, I'm done. I'm going to pass it over to Grega, but I want to say, guys, thanks for listening to us rant about the markets this morning. And Grega, I know you always have great charts, so let's see what you got, man.
Sure.
You know why I love you know, Grega's work so much is because I'm not proficient at counting waves. So getting somebody like Grega that is proficient at wave counts, I love to see his work. So you guys stick around. You guys are going to learn a lot.
Yes,
right
but actually you are looking, you know, a lot of traders, investors are also looking from an Elliott wave perspective while they are not even realizing. I mean, earlier you said that a lot of traders are now bullish S&P, bullish DAX. And that's exactly what the Elliott wave principle is all about, to recognize the cycles of extreme optimism, extreme pessimism, even if that's on a lower degree time frame charts, on a higher degree time frame charts, it doesn't matter. And that's exactly what the Elliott wave theory is all about.
Awesome. Well, let's see what you got.
Okay, so firstly, I mean, as I said earlier, euro dollar, I think that here on this zone, it's quite interesting in my opinion for the intraday setups. I mean, we clearly came out of this downward channel this week. After we hit the new low, you have a very nice divergence here at that lows, and looks like that we could be finishing these 5 waves down here. So I'm thinking about more upside, at least towards 1660, which is also the previous swing low. So if now current support will hold for the US session, 1517, 1580 is the support. And let's say that we stabilize here and then we rally during the US session back towards 1.16, then I think that more upside will be in the cards. So euro dollar is trying to, of course, to build a bottom, but as Blake said earlier, why would you look at the euro when you have a lot of other currencies versus the US dollar acting very, very strong? So let's take a look on some of them. Now here we have cable. Now, firstly, higher degree time frame charts. Notice that I'm tracking a very nice uptrend here. We have higher highs, higher swing lows, and in the middle of that move, you have a very strong, nice 5 subwaves. So that represents wave 3, while the following pullback looks like it's a corrective wave because you cannot count it in 5 waves. Rather, with 3 waves with a triangle here in the middle. We also stabilized here on this recent sell-off at the previous swing highs here, not only these two, but even if you go back to 2019 as well. So as long as we are holding this 1.134 level, I think that this one is going to continue higher. Currently, you are approaching this trend line here of this very massive bull flag. But I think that this could be taken out, especially as I said, if let's say dollar index will come even lower from current resistances, then of course strong currencies like cable will even accelerate. Now looking at the 4-hour time frame, we are obviously already well above the previous swing lows. So always when you are expecting market to continue lower, you definitely want to see that the previous swing lows will stay in place as a resistance whenever we see a break to a new low. So this resistance actually did not hold. Okay. In fact, we keep pushing higher here. We are already trying to break now this first swing high here. So in my opinion, there's a chance for more upside, especially if today cable will be able to close around current levels or even higher. I think that we can expect then more upside next week. Also, let's take a look on Aussie. Now, Dale will know that, and Steve as well, that we've been all looking for this Aussie dollar retracement to be only temporary from 2021 highs. So far, it's still in 3 waves, but unfortunately, we do not have this overlap with 75.20. But I highlighted in the past updates that actually this lockdown, when lockdown in Sydney was removed, I think it was this Monday, that's actually when Aussie again could be very interesting. Of course, this should be positive for economy, so maybe this data will even support the upcoming better data could maybe support this pair even more in the future. So what I'm looking at here is a ABC decline. Of course, as I said, 75.23 is our confirmation level. If we can overlap this structure, then I think that more upside can be coming here. Also, let me check if I have this chart here. Okay, that's the Aussie dollar chart. This is what I was looking for. So that's a daily chart, and I'm comparing the price action to last year. Okay, so in September, the first week of last year, in September, we have seen a top here on Aussie during the lockdowns, and then bottom has formed after the lockdowns were removed in October. And now again, this year, we have seen a top here on Aussie first week in September, and now again trying to build a bottom after lockdowns were removed. So I think that this is quite interesting price action. We still have this copper in uptrend. Here's this higher degree time frame chart. Looks like that we are breaking out of a triangle. Clearly drop from the highs was corrective. So I think this is a very positive for Aussie as well, and we'll be expecting more upside overall on Aussie strength, not only against US dollar, but also against other currencies. So we have here, for example, Euro Aussie. Now, I also talked about this one in the past. We've broken this trend line support of this bullish channel. We retested it as a resistance. Ideally, this is wave 2, so you are now in the middle of wave 3. Of course, some short-term rallies could occur, but I think that this could bring more sell-off. I'm seeing DAX, S&P 500, all of the other markets that could resume higher after those consolidations from September highs are finished. So this means risk-on environment could bring in more strength for Aussie rather than Euro. And this, of course, weakness in Euro Aussie means is a risk on play. Also, if we take a look on Aussie yen here, we are accelerating to the upside. Looks like that this current price action is very similar to what we have experienced here back in May. And normally the sharpest wave, the strong legs are impulsive. Okay, they represent wave 3 in most of the cases. So I'm looking this to be wave 3 that should take us here back to new highs, and then just be aware of this potential stabilization for a wave 4 before we travel even higher. If we take a look also on CAD yen, here's also very strong movement to the upside. Yes, we are at the new highs, but still far away from a completed pattern. So I think there is room for more strength. Now here I'm tracking this wave C. Again, it's a motive wave. Motive wave means you should see 5 subwaves, right? So if I label the substructure here, you have wave 1, you had a wave 2, expecting wave 3, wave 4, wave 5. So I think that once market will stabilize, which certainly will, I think that there will be new opportunities here on the upside. Now let's take a look also on some of the stocks. I mean, indices. Here we have, firstly, the S&P 500. Now, here I'm definitely tracking this very strong bull market. I will be expecting more upside after retracements, and recently we have seen already some retracement, not into the perfect 38.2%, which is fine, and some would expect that we will go even lower, while other may think, well, if we cannot retrace it with a wave 4 even to 38.2%, but the correction could be finished based on smaller real time frame charts, then you know how bullish the price action really is, how strong the trend really is. So I would not be surprised to see more strength here, and that's why I'm observing actually a few bullish interpretations. Now the first one is that we already completed this correction, as I said, because we have this break out of a downward channel. So today's price action should be quite important if we can rally, let's say above wave X, which is resistance at 44.82. And if we close above that figure, then I think that this could represent that we are in the middle of wave 3. If this resistance would hold, if we go just sideways today, then maybe this could still become a triangle, and this will probably be a nightmare for intraday traders. So I will keep a very close eye on this one, because I know that if the triangle would really unfold, we could be one step ahead of others here. So I think that this 78.6% is really going to be the most important to watch.
Nice. You still
there?
there, buddy?
Hey, you are here.
Okay. Yeah.
Yeah.
So a really nice rundown. Any view on how about when we take some requests from attendees? Here's
Yeah,
my
sure.
request was what's happened, and I know you were bullish gold before this pop. Where are you at on gold now?
Yeah, I mean, gold had a very nice setup here, based on the latest drop that we have seen, because you can clearly count this drop in 7 swings, and as you know, the overlapping price action, this normally means a correction. Okay.
Right.
So this was clearly the case here, while the previous rise was not overlapped, right? So you had these 5 waves up, suggested that market has bottomed here. And since we have this 7 swing drop with the break out of this downward channel, that was another confirmation, even if just temporary, that market is trying to build higher low here. So yes, back then, last week, it was a very nice consolidation going on, which was telling us that this metal is going to see more upside. What I see so far is a quite sharp dip here on the intraday basis. So maybe this wave B will still be unfolding as a potential triangle. It really depends how we will close today. Maybe we can just retrace back to the upside towards 1800 by the end of the US session. Then, of course, I will still stick to immediate bullish view for wave C. But for now, I really think that we should consider potential idea for a wave B here. But I think that we should just stay focused on a higher degree time frame chart. I know that Stelios will love this. We are looking still here for a wave 4 consolidation. So market is just waiting or catching up the breath here before it will potentially break higher.
Make new highs. Yeah.
Yes, I mean, if I respect the Elliott wave principle, then I cannot label a top here because I don't have 5 waves down here from the highs. And from that low, from 2015, we also do not have 5 waves up either. So I think that this is a very clear potential continuation.
I like your telescopic looks. A lot of people requesting USD Cad. But go ahead. All right.
Just a second. Okay, dollar CAD. Okay, so dollar CAD, it's very important actually to stick with the potential bearish view as long we are trading below 1.3 level. It was a very strong support here at the start of last year. Then in September 2020, and then it proved to be a very strong resistance. We also came down from this channel, so I think that there is room for more weakness here. We clearly have to respect what the market is doing. Crude oil is very strong. We see US dollar index just trying to reverse from resistance. And now imagine if dollar index will continue lower, even if just temporary, then Canadian dollar, which is already strong now, will become even stronger. So looking at this structure here on a smaller degree, I'm looking for potential 5-wave drop, either into extended wave C right now or wave 3. It doesn't matter. I think that there is room for more weakness. Now on the intraday charts, what would I pay attention on is a 3-wave rally back towards 124.30 to 124.70. That would be your resistance if we get a 3-wave rally. If we get just a sharp 1 leg up to the upside, then of course that's not going to be a corrective rally. But if we get a 3-wave movement into this zone, then watch out for more.
Okay, so at your 2618 for 5, that's still putting in a higher low. Could that set up a C wave rally from down there to above 131?
Yeah, exactly.
Okay, that's what I thought. Okay.
Okay. Do we have any other requests?
How about the guppy? Just someone asking about the guppy, which is going to go along with the carry trades that Blake was talking about today. But let's see her count. It's probably the strongest. So everyone thank Grega for his USD Cad look.
Just a second. I will also take a look now on DAX. Just a second, because
DAX.
Yeah, I mean, looking at DAX here, I'm also expecting more upside here. This is what I wanted to highlight earlier, because as I remembered, Blake also mentioned the PIP.
Yeah.
And also, as I know, Andrew was long as well. I think he was long on the S&P 500. So I think that there is room for more upside. We came out of this downward channel, and looks like that we are now breaking out very nicely here. So again, if we can close above that line, I think that more upside here will be seen. Keep in mind that I'm looking and expecting this rise from October lows to unfold as a 5-wave structure, and so far we have only 3 waves up, and looks like that the third leg is becoming extended. So I think that there will be opportunities here still on the upside. Now, when looking at the let's take a look at the lower time frame here. Notice that I have the head and shoulders target at 15,700. Okay, that's where you have this measurement from head towards the neckline from the breakout point. And also you don't have this completed 5-wave sequence on a smaller degree here from 15,000. So I think that this makes quite nice potential upward projection here. You also have this resistance back from end of September. So I think the DAX is looking quite good here. Now, as you mentioned, pound yen, right?
Yeah.
So pound yen, we are already back at the highs. We've been tracking this 4th wave consolidation for a while. And when looking at this price action, it's quite late to look for any opportunities. But when looking at the smaller time frames, of course, you need to have 5 waves up, a completed pattern before you may say that maybe top is approaching. So there is room even for 160. But if someone is looking for potential opportunities, you definitely want to see some pullbacks here. Now the support is at 155 for potential wave 4. The only question is when and from where this retracement will occur. Will this be from current levels or even after higher extensions? So we just have to wait on this.
Okay.
Take a breath here.
All right, Hugo, are you asking about the Dow or 30-year yields? Hugo.
Probably the Dow.
Dow, he's asking about Dow. And you already covered copper kind of when you were talking about Aussie. Okay.
Let me take a look. Okay, so Dow Jones clearly looks like it's consolidating, maybe already ready to breaking out here, which makes sense if DAX is really going to see more upside from here. If stocks is making this break higher into wave 3 or 3, then of course this is what you want to look for here, for a continuation higher into wave 5. Clearly, I don't see any reason why some would say that here is multi-year top coming. I mean, it's much more easier.
Yeah, so it's a wave 4
market.
triangle with a terminal thrust to the upside for 5.
Yeah, that's very important, because we know that after triangles, everyone gets very excited because triangles are very complex. They take a long time to unfold. They move in both directions. So when finally the market breaks to a new high, everybody are so excited. They want to establish new longs, but usually that's too bullish. It's very late in the game. So that's why you see this final trust to complete a higher degree pattern. And that's why the pullback.
Would that complete a big
place.
wave 3 up there and then unfold like a huge wave 4 correction?
Yeah, I mean,
if it unfolds like that.
You know, always when I'm looking at, not always, but I'm trying. Whenever I look at the price chart, I always somehow try to label top of a wave 3 if I see an upcoming top, rather of a wave 5. Okay, because wave 5, if you expect the top of a wave 3, you are more open-minded and you know that you can expect more upside after pullback. It doesn't matter what kind of a pullback will be, you will try to recognize a pullback.
It gives you the correct bias.
Yes, exactly. So you want to stay with this trend. So let's say that we see a 5th wave up there, then probably I would go with this kind of wave count. Okay. And again, I would continue to look higher after retracements. So it's very important just to try to stay with the trend and try to label the wave count in the direction of the trend, as long the price action allows you to do so.
All right, we have time for one more. The next request was from Jerry. He wanted your view on USD MEX.
Yep.
And thank you for dropping in on a Friday, bro. You know, everyone's kind of tired by the end of the week, or maybe I'm just speaking for myself.
I'm here trying to say this.
Yeah.
Okay, so here it's a very long consolidation. I'm quite surprised. I mean, Bank of Mexico, if I'm not mistaken, they were raising rates a few months back. And then you have this crude oil breaking higher. And then you have dollar Mexican peso reversing from the lower side of the range towards the upper side of the range. As you know, I was looking and expecting, based on energy markets where I was looking for more upside, I was expecting that dollar Mexican peso will actually break to the downside here. It didn't happen, so it looks like that this is now going to be more complex correction, but still I'm looking for a correction. That's the most important when looking at this price chart. It's still a pause within a downtrend. I'm looking this to be wave 1 up there, wave 2. You have 5 waves down for a wave 3, and now you have this consolidation. What is
okay,
also
let me ask you this, Grega. With the it kind of you know, firmed up with risk off the lows. If the Dow's going to make a new high on wave 5, maybe we still get your scenario for that break down to A.
Yeah, exactly.
Down
this
there,
is
right?
Yeah, this is what I'm also looking at. Exactly. So I'm expecting also dollar index to come to the downside. Maybe it will not to the same degree when looking at commodity currencies versus the US dollar, because dollar index depends most from the euro, right?
Right.
So that's probably the issue because of the euro. So when we are looking at the US dollar now, it should be very important to look at the equal weighted dollar chart rather than dollar index and then saying, well, dollar is going up, dollar is going down. Well, dollar is going down already now if you're looking or comparing it to some other currencies rather than euro. So that will be very, very important to actually be on the right track with this dollar view. But as you said, if we see a risk on continuation from here, then of course dollar Mexican peso could still see more weakness here, in my opinion.
Okay, and one more pound Swiss for Nuno.
Pound Swiss, okay. This one is probably tricky, Asim. I'm not sure if I have the wave count here on this one. Let me check. Okay. Okay, so this one is where you can see that we have this massive spikes. I mean, Swiss Central Bank is probably the main reason.
A lot of brokers I heard are raising margins on anything Swiss related because of that.
Yeah, I mean, you probably, before you're looking at this one, you should look at the euro versus Swiss. So let me take a look. I think I have it here. Here's the daily chart. Okay, so here we have this potential ongoing 5-wave drop. We broke below this trend line support. It acted very nice as a resistance. And now if you look at the weekly chart, I would not be surprised if something similar will occur here. Okay, if Swiss franc will continue to see, let's say, a move close towards equality parity level here, then I think that, as you know, they will intervene, and this will have impact on other currency crosses as well.
Okay,
but
it
so
kind
far
of speaks to a weaker dollar.
Yeah, I mean, but after this, after we see a continuation lower, so here I'm expecting more weakness into wave 5, and now if we try to respect this, and let's take a look then at pound Swiss. Here it's not very clear, actually, to be honest.
Okay, I see you have lines through.
From the euros.
How about just one quick view on Dixie? We are, I think, having a little reversal week to the downside in Dixie, the heavily weighted with euro. What do you have for, you know, how deep this correction may run on the dollar index?
Yeah, just let me just make this back.
Oh, you're still trying to do the pound Swiss. Okay.
Yes. So pound Swiss, I mean, maybe this one could even continue or try to spike to a new high if we can see break above 128.30. That's your upper trend line resistance. This could bring more upside here.
See,
So-
doing Elliot on the fly for you.
Yeah.
Okay, Nuno.
Okay,
And,
so you
so-
mentioned dollar index, right?
Yeah, yeah.
Yeah, I mean, dollar index, I remembered very well here at the start of the year. Everyone was so bearish
Bearish,
US dollar
yeah.
index. Now everyone are so bullish.
Yeah,
US
it's the
dollar.
opposite.
Yes, or when looking at the euro, they are extremely bearish. So here,
Not everyone.
You have only 3-wave rally from the new low, right?
Yeah.
And you have these 5 subwaves within wave C. But even if I delete this, okay, and you have 5 waves up, after 5 waves, you would expect a 3-wave setback. And the 3-wave setback usually can take us back into the area of a former wave 4, which is that region.
92-ish.
92, 93, that's the area, because 93 was the starting point of wave 4, 92 was the ending point, termination level here.
Okay.
So that's the area. So this is what I would be looking for in, let's say, by the end of the year. It will be very important to see if this drop towards this area would be impulsive, or maybe it will be only in 3 waves. But I think that since we have these 3 waves up back into the previous 4th wave, and also this COVID spike low here back from last year for March, I think that this is very, very important potential resistance zone. I definitely
that
would
it
not
could
be
turn into this is the end of the bear market rally in the dollar, and we're going to new lows. Take out last year's lows now that
Yeah.
everyone's bullish at dollar.
Yeah,
Okay. Great presentation, buddy.
yeah. Thank you, man.
Yeah.
Thank you for
So
having me.
always great to have you here. You're always welcome, and not just when I don't have a guest, because you're as good or better than any of the guests I bring on, Grega, and I appreciate your work. I know it helps, clarify things for me, gives me good biases. I'm sure it does that for everyone else that hears and sees your work. So that's a wrap, everyone. And what a way to top off the week with the Wizard of Waves and the whole team laying everything out on the court for you guys. It's our mission to build up and edify you guys every day.
Thanks, Dale. And thanks,
Go ahead.
Grega. Appreciate it.
I was
Yeah,
just going to
thank you,
say,
man.
so
Thank you, mate.
if you want to thank us, I don't know is the offer still up, Blake, or is it
I
pulled?
don't know. I have no idea.
Steve?
Steve?
Yes, this is your last chance, actually. We're
Last
taking
chance.
it off
Last chance saloon.
Monday morning European hours. It's gone.
Okay. All right. So, make your move. Don't procrastinate.
And by the way,
Join
that is
us.
purely because our developers have been running around like crazy. So,
all right. Well, I want to thank the team for their efforts this week. There's some very good pattern in plays, and all the webinars that our members, subscribers get during the day that F.A.C.E is just the tip of the iceberg. And the chat room, and there's just so many advantages. So I'm not asking you to spend money. I'm asking you to invest in yourself. And remember, don't just count your pips, count your blessings. I consider being part of the ForexAnalytix team one of my blessings. So everyone have a great weekend. Do your work. If you do your work, you'll avoid FOMO. I guarantee it, because when I don't do the work, I say things like, huh, that looks good. I think I'll give it a shot. And that's impulse trading, so don't wait as long as I did to eliminate that habit. Okay. And that's it. Steve, nice to hear your laugh, and guys, have a great weekend, and
You
we're
too,
gonna do
Dale.
it. Yeah, we're gonna do it all over again for you guys next week. 4.5 years of doing this already, guys. I know many have learned a lot of things during that time, and we all feel good about that. So Blake, Steve, Grega, Ryan, anyone still hearing my voice? Thank you, guys. Have a great weekend, and
thanks, Dale. You too.
Take it easy, Blake. See everyone later.
Thank you, Dale.
You're welcome, Steve. Good to hear you. Adios,
Bye-bye.
everyone.